Tren digitalisasi telah mengubah perilaku masyarakat yang lebih mengedepankan mobilitas, kecepatan, fleksibilitas, dan keamanan, termasuk transaksi keuangan. Karena itu, dibutuhkan infrastruktur pembayaran yang memberikan kemudahan dan kenyamanan bagi pengguna. Bank Indonesia memperkenalkan BI Fast. Pengembangan.
Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua. Shalom, Om Swastiastu, Namo Buddhaya, salam kebajikan. Distinguished Deputy Governor of Bank Indonesia, Bapak Doni P. Juwono, Co-Chairs of the Global Partnerships for Financial Inclusion, Ms. Magda Bianco from Bank of Italy, and Ms. Anna Zelensova from Ministry of Finance, the Russian Federation, Deputy Commissioner of OJK Institute, and Digital Finance of Indonesia Financial Service Authority, Bapak Iman Shah, Head of SME Development and Consumer Protection Department of Bank Indonesia, Ibu Yunita Resmisari, Head of Center of Financial Sector Policy of Indonesia Ministry of Finance, Bapak Adi Budiarso, Analyst from the World Bank, Garuda Cash Alliance, Goto, and Avanti Finance, Head of Departments and Representatives Office of Bank Indonesia, representative from ministries and institutions, participants, invitees, stakeholders, strategic partners, and ladies and gentlemen. Welcome to the International Seminar on Digital Financial Inclusion. This International Seminar on Digital Financial Inclusion aims to share best practices use of affordable and responsible digital financial service from policymakers, regulators, industries, and other relevant stakeholders to boost financial inclusion and showcase policies and programs to expand the use of digital financial service in supporting financial and economic inclusion. My name is Nadira Titalia, and it is my honor to welcome all of you to the official side event of the G20 Indonesia Presidency 2022, with the theme of Recover Together, Recover Stronger, which will be followed by the first Global Partnership for Financial Inclusion meetings on the 3rd and 4th of February 2022. All right, ladies and gentlemen, this afternoon event will be commenced with welcome speech from co-chairs of the Global Partnership for Financial Inclusion. First, I would like to invite Ms. Magda Bianco from Bank of Italy to deliver his speech.
Ibu dan Bapak, selamat datang. Ladies and gentlemen, it is a pleasure and a honor to welcome all the participants to this international seminar, opening this year of Indonesia presidency of the Global Partnership for Financial Inclusion. And thank you to the Deputy Governor of Bank Indonesia and all the distinguished speakers for supporting this event. The financial inclusion agenda has progressed a lot over the last 10 years, since GPFI was created by the G20 in 2011. It is true we still do not have recent comparable data for all countries because the FINDEX, the Financial Inclusion Dataset, will be available only later this year. But some evidence suggests that inclusion has grown since 2017, the last year available for FINDEX. Well, beyond specific dedicated policies addressing it, such as specific financial inclusion national strategies, the growing digitalization of financial services, which has been enormously enhanced by the pandemic, as all of us know, was recently a further potential source of inclusion. Last year, GPFI work, in line with our 3-year Financial Inclusion Action Plan, aimed precisely at evaluating the conditions to ensure that the opportunities for enhanced inclusion from digitalization are effectively sized. But at the same time, the risks associated with it, for example, of new forms of exclusion, especially for the most vulnerable, well, that these risks are limited, are addressed. Under the Italian presidency, with the support of all member countries and our implementing partners, a number of reports addressed these issues for both individuals and micro and small and medium enterprises. And I must say a specific attention was devoted to remittances. Well, which conditions are essential? Well, of course, preconditions such as adequate and safe digital infrastructures and the possibilities to access them, for example, through effective digital IDs, are essential. But GPFI worked specifically on two of these conditions, those related to customer protection on the one hand and on financial education on the other, for both individuals and micro and small and medium enterprises. We worked on very concrete and specific examples of best practices from member but also non-G20 countries. The final result, the final output, has been a menu of policy options of best practices in these two areas, and you can find them on the GPFI website. And they organized into three groups. The first refers to addressing the impact of the crisis, but thinking ahead at the same time. An example of these advices, these policy options, is taking advantage of the momentum of the crisis to increase financial literacy. The second group refers to leveraging digitalization for a leap forward in financial inclusion. Here an example is all policies that refer to support inclusive financial innovation by embedding financial inclusion objectives into innovation policies, such as sandboxes or innovation hubs. The third group refers to addressing new and exacerbated risks and vulnerabilities. And here, one of the examples that we provided is introducing and strengthening effective redress mechanisms to protect consumers and micro and small and medium enterprises. Well, of course, I won't detail the single policy options. You can check them, but I think they might be really useful for policymakers to consider, as they have already proven effective. Now we are ready to proceed further, to build on these, and with the Indonesia presidency, which we thank, address the further challenges that we have. I think today's seminar will offer very important insights. But on this, I leave the floor to my co-chair, Ibu Anna. Terima kasih.
Thank you, Ms. Magda Bianco. Next, I would like to invite Ms. Anna Zelensova from Ministry of Finance of the Russian Federation to deliver her speech.
Ibu dan Bapak selamat datang. Deputy Governor Bapak Doni Yavono, Ibu Unitaris Mistari Bapak Adi Budiarso. It's my pleasure and honor to speak at this international seminar on digital financial inclusion, opening the year of Indonesia G20 presidency. As my co-chair, Ibu Magda Bianca already said, the financial inclusion has progressed a lot over the last 10 years. Many important steps were done globally and in many countries. However, here still around 1,700,000,000 people all over the world who do not have any access to financial institutions such like banks. Due to pandemic, many things were forced to go digital, and many people choose to make their payments via their computers or cell phones. Thanks to that digitalization, very rapid digitalization, people in many countries were able to receive payments from government, keep their small business work. Nevertheless, digitalization can put those disadvantaged people into a more troubling spot, as they don't have the access to the technology to allow for such easy payments, or they don't have enough digital and financial literacy. In developing countries, many individuals and micro businesses, especially informal businesses, have become extremely vulnerable during the pandemic because they do not have access to the formal financial services. It means that our mission is not complete. Women have taken the burden on this issue, as well as young people, micro businesses, farmers, and rural people. Deliverables of this year for us as Global Partnership for Financial Inclusion, the G20 platform, which aims to help countries, it's really very practical. Our deliverables are instrumental, and we try to make things work and help countries really scale up and really make this reality in getting the cooperation between the public and private sector going, and also figure out how things work better, what kind of data is still missing. We aim to deliver the implementation framework, a set of guidelines that can assist countries to implement them at national level, improve their regulatory environment, improve their ecosystem digital infrastructure that can promote not only access but also effective use of innovative digital finances, both for individuals and micro, small, medium businesses. We need to examine the role of banks and alternative financiers, how it can be done better, how the critical important models can be adjusted, what kind of infrastructure can be critically important, and what kind of policies and regulations. So we would work hard on these deliverables, and we also aim to create a permanent virtual stock-taking database in collaboration with our implementing partners such as SME Finance Forum, World Bank Group, all other key international financial institutions and banks, to store cases of financial products and services for MSMEs. So today's seminar, we hope will help us to and give us very important insights and help us in our future work. I wish successful seminar to all of us, and I wish very successful G20 presidency for our Indonesian colleagues, and we would help them to make it really success. And in all things we do, of course, we remember, and we should remember, about our final beneficiaries, about those most vulnerable, about young people, women, farmers, rural people, all those whom we could help through developing more effective policies at national and global level. Terima kasih, and thank you very much.
Terima kasih, Miss Anna Zelensova. Distinguished guests, now would like to invite the Deputy Governor of Bank Indonesia to deliver his keynote speech. Bapak Doni P. Juwono, the time is yours.
Thank you, Nadira. Distinguished speaker and participant of International Seminar on Digital Financial Inclusion, Ms. Magda Bianco and Ms. Anna Zelensova, co-chair of the Global Partnership for Financial Inclusion, Mr. Iman Shah, Deputy Commissioner of OJK Institute and Digital Finance, Indonesian Financial Services Authority, Ms. Ruth Goodwin-Grun, Managing Director of the Better Than Cash Alliance, Ms. Sarmista Apaya, Senior Financial Sector Specialist of the World Bank Group, Mr. Budi Ganda Subrata, Managing Director of GoTo, Mr. Rahul Gupta, Chief Executive Officer of Avanti Finance, and then Ms. Junita Besmisari from the Bank Indonesia, and Mr. Adi Budi Arso from Ministry of Finance as the Indonesian Head of Delegates of GPFI. Ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. a very good morning, a very good evening. First of all, let us extend our praise and gratitude to Allah Subhanahu wa Taala, God Almighty, sent only with His blessing. We all could participate here virtually in the international seminar on digital financial inclusion. It is such an honor for me to have this valuable opportunity to attend this event. I also would like to appreciate the distinguished panelists who are virtually present, contributing their valuable time and experience in this important event, as well as all the participants who have joined us today. And then it is an honor for me to welcome you to the international seminar on digital financial inclusion, which is being held as one of the side events of Indonesian G20 Presidency 2020. Ladies and gentlemen, Indonesian G20 Presidency theme for 2022, Recover Together, Recover Stronger, is extremely pertinent given the current global situation with the Omicron variant of COVID-19 contributing to economic uncertainty, the recovery, which may be uneven between rich and developing nations due to inequitable access to vaccine, as well as the scaring effect of the lengthy epidemic, has prompted Indonesian G20 presidency in line with the direction by the President of the Republic of Indonesia to focus on three areas: global health architecture, sustainable energy transition, and digital transformation. Overall, Indonesia is committed to addressing future global concerns and seeking the best solution to enable that all nations recover and unison, as well as promoting policy reform that support stronger, more sustainable, balanced, and inclusive economic growth following the pandemic. Ladies and gentlemen, distinguished speaker, the COVID-19 epidemic has had a significant impact on vulnerable and underserved groups in society and SME, particularly women and youths. The limitation on mobility had resulted in sharp decline in MSME product demand, affecting their revenue, significantly impairing their ability to function and causing liquidity problem, while household experience income loss, resulting in decreased spending and consumption. Economic hardship exacerbated by limited access to financial products and services, and insufficient financial safety net has raised the likelihood of this population falling further into poverty. MSME and entrepreneurs were at the epicenter of the economic instability due to their overrepresentation and sector most vulnerable to mobility restriction. The pandemic implication for vulnerable and underserved group and MSME, particularly women and youth, may last longer than anticipated. According to Bank Indonesia survey performed in 2021 revealed that 77.95% of SMME suffer negative effect from pandemic in the form of the decreased income and increased operating expenses. As a countermeasure to mitigate the pandemic impact on vulnerable and underserved communities, as well as micro and small businesses, government worldwide have accelerated their social protection program. The COVID-19 crisis demonstrated that nations with the developed social protection system, payment infrastructure, and widespread across to digital financial services are better equipped to effectively route the social assistance payment than others. And then, distinguished speaker and ladies and gentlemen, Despite the challenge MSME encounter, many have adapted rapidly and shifted to digital-based business. In Indonesia, for example, a Bank Indonesia survey in 2021 revealed that 20% of the MSME were able to mitigate the pandemic impact, particularly by establishing a business digitalization plan and leveraging online marketing media. According to the supply side data, the adoption of non-cash transactions such as debit card and electronic money indicate that individuals are transitioning away from the cash transaction. Additionally, in the area of the QR code payment, the number of the quick response code Indonesian standard, we call the KRIS, merchant has increased to 13.6 million merchant by December 2021. The KRIS transaction have continued to grow. In December 2021, the nominal transaction has reached 27.7 trillion or 237% annual increase year on year. As we can see, the COVID-19 epidemic has pushed the usage of digital technology for the variety of economic and financial transactions. Financial technology advancement, digitalization of the financial product and services, and online business activities, assisting SME in protecting their revenue and employment level. Ladies and gentlemen, distinguished participants, financial inclusion has the potential to play a critical role in the promoting MSME productivity through digitalization, increasing vulnerable and underserved group, and MSME access to sustainable and affordable digital financial product and services that boost their productivity and resilience to economic shock, as well as promoting financial intermediation. And then I think I agree with Ms. Magda Bianco and Ms. Anna Zelentova. Digital technology and innovation in the financial sector is not without risk. Risks relating to fraud, cybersecurity, and the data privacy could be worsened by the lack of financial literacy in the population. In Indonesia, the financial literacy survey conducted by OJK in 2019 revealed a level of the financial literacy of 38.03%, despite widespread use of financial product services as well as digital tools. A recent CGAP study in 2021 identified the most prominent new risk as data abuse and fraud, particularly for novice and vulnerable digital financial services consumers. These include mobile application fraud, synthetic identity fraud, biometric identity breaches, algorithmic bias, and NTC. In addition, other consumer hazard, including data breaches, SIM swap fraud, aggressive marketing, and debt collection practices, ineffective dispute resolution, and risk of the liability allocation are not new, but have gotten worse as a result of the wider adoption digital technology. In this regard, it is critical to strike a balance between innovation to promote digital financial inclusion and recognizing, assessing, monitoring, and managing emerging risks. This is consistent with one of the 10 principles outlined in the G20 high-level principle on digital financial inclusion, which were launched in 2016 and include key actions such as encouraging regulatory and industry effort to balance innovation and risk in the area of digital financial inclusion. It is also consistent with the Bali fintech agenda, particularly the element number 6 adopt regulatory framework and supervisory practices for orderly development and stability of financial system. And number 7, safeguard the integrity of financial system. Ladies and gentlemen, digital financial inclusion has emerged a top priority for the Indonesian G20 presidency in 2022. The overarching outcome of the presidency is to develop the financial inclusion framework in harnessing digitalization to increasing productivity, sustainable and inclusive economy of human, youth, and MSME. This framework will be supported by several reports in the digital financial inclusion and SME finance area, in line with the G20 Financial Inclusion Action Plan. As part of the G20 side event, today's seminar is highly important because we will be exploring how regulatory policy and industry innovation could play a significant role in boosting the usage of digital services when they are delivered responsibly. We will discuss digital financial inclusion from both the regulator and industry player perspective. In the first session, we look at the prudential principle for addressing potential risks and promoting responsible business practices. Furthermore, in the final session, we will look at supply side issue from industry player, also from one of our unicorn, including their success and challenges in developing innovation that has a significant impact on financial and economic inclusion. Ladies and gentlemen, taking into account the importance of digitalization in the current economic situation, Indonesia G20 presidency aims to harness the digitalization not only to promote financial inclusion for the target group of MSME, especially those owned by women, youth, but beyond that, with this to increase productivity, sustainable and inclusive economy. Striking the right balance between innovation and risk would be at the forefront of the G20 to deliver responsible practices of financial products and services that could promote financial inclusion. We hope that today's seminar generate the finest idea and inspire new activities to advance digital financial inclusion, particularly for the most vulnerable and underserved segment of society, in order to recover together, recover stronger. May God Almighty bless and lighten our step toward better future. And thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Deputy Governor. Now, ladies and gentlemen, to celebrate this moment, allow me to kindly ask again Deputy Governor of Bank Indonesia, Bapak Doni P. Juwono, Ms. Magda Bianco, and Ms. Anna Zelensova to join us in a group photo session. I would like to also invite Ibu Yunita Resmisari and Bapak Adi Budiarso, representative of Indonesian G20 Presidency for Global Partnership for Financial Inclusion, to also join us in photo session. We will take twice the photo on the count of 3. 1, 2, 3. Okay, once again, 1, 2, 3. All right, thank you very much. Distinguished guests, now we have seen together the opening of the International Seminar on Digital Financial Inclusion. Once again, allow me to express my sincere gratitude to Bapak Doni P. Juwono, who have joined us in this auspicious moment. You may continue your next agenda, Pak. Thank you for attending. We kindly request all participants to join us in our next agenda, which is the panel discussion of International Seminar on Digital Financial Inclusion. The first theme would be the prudential principles to address risk and promote responsible business practices in fintech. And the second theme, which is supply side innovation. Now, without further ado, we invite our moderator, Ms. Valerina Daniel, to commence the panel discussion.
Thank you, Ms. Nadira. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua. Shalom, Om Swastiastu, Namo Buddhaya, salam kebajikan. Good afternoon, Deputy Governor of Bank Indonesia, Bapak Doni P. Juwono, Co-Chair of the Global Partnership for Financial Inclusion, Ms. Magda Bianco from Bank of Italy, and Ms. Anna Zelensova from Ministry of Finance of the Russian Federation, Deputy Commissioner of OJK Institute and Digital Finance of Indonesia Financial Services Authority, Bapak Iman Shah, Head of the MSME Development and Consumer Protection Department of Bank Indonesia, Ibu Yunita Resmisari, Head of Center of Financial Sector Policy of Indonesia Ministry of Finance, Bapak Adi Budiarso, distinguished panelists from the World Bank, Better Than Cash Alliance, GoTo, and Avanti Finance, Head of Departments of Representatives Office of Bank Indonesia, representative from ministries and institutions, participants, invitees, stakeholders, strategic partners, ladies and gentlemen. Welcome to the International Seminar on Digital Financial Inclusion. My name is Valerina Daniel, and it is an honor to be your moderator today. As we already know, the COVID-19 pandemic has caused economic pressure that widened inequality, especially for the most vulnerable and underserved groups, including micro, small, and medium enterprises, or MSMEs. Countries worldwide have taken extraordinary steps with very large stimuli to maintain an inclusive economic recovery. These efforts, among others, are carried out through digital innovation. However, along with the rapid digitalization, the risk of financial exclusion remains a challenge. Lack of financial and digital literacy, unequal access to digital infrastructure, data privacy issues, cybercrime, inappropriate online lending practices, and shadow banking magnify the importance of harnessing the benefit of technological advancement while mitigating the risk. With the theme Recover Together, Recover Stronger, the 2022 G20 Indonesian presidency will focus on recovery after the COVID-19 pandemic, among others by promoting digital financial inclusion and SME finance. Therefore, today we are very fortunate to be able to discuss these topics in two sessions with our prominent speakers from Indonesia and abroad. For the first session, we will talk about prudential principles to address risk and promote responsibility in fintech. Let me introduce you to our speakers. First is Bapak Iman Shah, Deputy Commissioner of OJK Institute and Digital Finance of Indonesia Financial Services Authority. Good afternoon, Bapak Iman Shah. Our second speaker is Ms. Sharmista Apaya, Senior Financial Sector Specialist of World Bank Group. Good afternoon, Ms. Sharmista. And finally, Dr. Ruth Gupin-Groen, Managing Director of Better Than Cash Alliance. Good afternoon from Jakarta. Thank you, speakers, for being with us today. Allow me to inform you that each speaker will have 12-minute presentations, followed by a short Q&A session with our moderator. Then you can also see the timer on your bottom left screen. Would appreciate if all speakers could follow the time arrangement. Now, I would like to invite Bapak Iman Shah from Indonesia Financial Services Authority to deliver your presentation.
Thank you, moderator, Ms. Valerina Daniel, for the opportunity and inviting as well OJK to this very important event this afternoon. I think before continue my presentations, just would like to regard as well our distinguished Deputy Governor of Bank Indonesia, Mr. Doni P. Juwono, and also the co-chairs of the Global Partnership for Financial Inclusions, my colleagues from Bank Indonesia, my colleagues from the Ministry of Finance, as well all of the participants attending this seminar. But I think accordingly, I would like just to speed up my presentation, considering that only 12 minutes provided for my presentation. So I think the title is already being set by the committee, that I would just like to share the issues on implementing prudential principle in expanding the use of fintech. And I think other issue will be also touched by the other speakers, and it is very honored as well to share ideas and insight experience as well during the Q&A session later on. So I think just please next slide please. So I think accordingly there will be I think 4 issues to be discussed in this very important opportunity. I think we just like to talking about the benefit of fintech. I think from the perspective of the authority in Indonesia, I think to some extent OJK is very much also being engaged and responsible how we are supporting the ecosystem, the development of the fintech here in Indonesia. And then afterward, we just like to issue what is the challenges and risks attached to the fintech, and the policy and strategy in how we are tracking the right balance between the risk and also the benefit of the digital innovation. And later on, we try to see whether we are also very much engaged with the digital financial literacy, in particular for the micro, small, and medium enterprises. Next slide, please. So when we're talking about digital transformation finance sector, that's a lot of fact that we have right now in Indonesia. We're talking about digital opportunity. We also very much aware with digital behavior, but on and on, I think a lot of modalities that we have that supporting how we are going forward, go into the digital era in financial sector in particular. That's really part of my areas that we are keep on monitoring how we are do the evaluations and keep on facilitating the development of digitalization in financial sector. So we can see from the data how is digital transaction is keep on increasing years on year, from year to year, and also the digital banking transaction, including as well the electronic money. So there's no doubt for us at this moment that the number of transactions within that digital banking transactions and e-commerce, and as well as the e-money, will keep increasing in years ahead. And I think that's really reflecting how we are going forward. We have to facilitate, and we have to come up with regulations that are accommodating this development in the digital transformations, in particular in the area of financial sector. Next slide, please. Well, I don't want to. Well, I think to some extent there's some point that have been raised as well with the deputy governor, that we do have this the number of financial the financial literacy index that in 2019 we only have like 38.037%. And the number of national financial inclusion index is 76.19%. And I think to this number, we can see that a lot of room as well for increasing the percentage in the future, because we are very much having a lot of efforts that we put into how we are getting into more and invite more people to becoming aware and also becoming familiar with the financial services and products. But the one that we are very much concerned as well, that I think it's something about the infrastructure. So I think 90% of the internet availability is still concentrating in the Java Island. So I think it's also part of government commitment also to set up like more infrastructure supporting the digitalizations across the archipelago, not only in the Java Island. Next slide, please. One thing that I want to share from the previous slide is actually that going forward there will be some things that merger transactions between our unicorns. So I think that's really some areas that we have to be cautious as well in the future. this slide shows us that the statistic of fintech in Indonesia, where in particular for OJK, we already licensed 103 P2P lending, and under our supervision as well, we license already as well the 7 securities crowdfunding, and still under our supervision right now we have 84 what we call this digital innovations financial. This what we call it inovasi keuangan digital, and we put it in our regulated sandbox. So I think to some extent, when we're talking about financial inclusions, there will be like enabling as well platform fintechs that will be support us how we are increasing our financial inclusion in the future. Let's say we are talking about the eKYC, we're talking about the innovative credit scoring, but all those will be put under our regulated sandbox as well before they are having a license to go on their business. But that's something that on the other side, because these fintechs under our regulations right now also being supervised by multi-regulators, multi-domestic regulators. I think in this area we have to do more coordinations, how we are, preventing our fintech platform to be used wisely because of this different and multi-regulators supervise the fintechs here in Indonesia. And next slide, please. So when we're talking about micro, small, and medium enterprises as well as women entrepreneurs, we do have something that things in the future there will be a lot of room as well. How we are pushing very hard. How is the micro, small, medium enterprises to have the access to the financial sector as well as the women entrepreneurs, because of this fact that women entrepreneurs, when we're talking about the ownership based on gender, still we can see that the women still below the number of these men that having also these micro, small, and medium enterprises. But I think to some our experience that when we're talking about the effectiveness, the quality of these women entrepreneurs, I think to some extent we are very much appreciate that they are very much good, better in quality, better in financing their business in the area of micro, small, and medium enterprises. Next slide, please. So, but still we have these challenges for the whole of micro, small, and medium enterprises. We're talking about the geographical conditions, the business license, and the lack of financial report things, and lack of collateral as well. So, but I think these challenges have been addressed by our government, and we can see that a lot of effort as well have been undertaken by the government just to resolve these challenges, and we can rely more on how is medium, small enterprises can support our economic growth in the future, and that will be also being part of the contributions conducted by the digital finance, whether it is in the financial sector or it's outside of the financial sector here in Indonesia. Next slide, please. So when we're talking about this, our role as regulator and striking the balance, I think I just take this G20 high-level principles on digital financial inclusions principle 2, which is a balance, innovation, and risk. That's really the short format of this principle 2. So when we're talking about the innovations and the other side, we're talking about risk mitigations. So we have this like a 3 areas that we have to consider very carefully when we're talking about innovations, and we're talking about market integrity, and we're talking about rule clarity and simplicity. So when we just combining, we just focus on innovations and rule clarity and simplicity, then you will undermine the market integrity. But when you're talking just only you're focusing on the market integrity and also the rule clarity and simplicity, then you will jeopardize innovations. But then if you're just talking about these innovations and the rule clarity, this will need a complex and detailed rule book, which is not really preferable for how you support the innovation. So this becoming like common issues for all regulators around the world, that they are having how you strike the right balance between innovations and risk mitigations. In the area of risk mitigation, I think it is very common that we are now facing the issue of cyber risk, the issue of systemic risk, and also how we are engaged with the issue and customer and data protections. But as we are going forward, we are having also our foundations, how we are moving how we are touching the issue on this innovation and risk mitigation is a light touch and safe harbor approach to create responsible innovation. I just remember my experience when we dropped the regulations on P2P lending in 2016. So it doesn't seems very much welcome from the board of commissioners of OJK at the time, that we are putting a lot of standard apply to the incumbent banks, and then we put it under our new regulation on the P2P lending. There's a lot of corrections at that time, and then we try to come up with a more simple way how we are addressing the risk mitigation in our P2P lending regulations. Next slide, please. Well, when you're talking about how we try to strike the right balance between innovation and risk mitigation, so we have these 7 areas that we are try to cover. I think we just having this during our discussions later on. Next slide, please. Talking about digital financial literacy initiative in OJK, so I think this is also covering already a lot of concerted effort just to address a very effective digital financial literacy for our community. In particular, we are addressing also how we are talking about this digital financial curriculum with the universities. And last slide is we're talking about deliverables when we are having this digital financial literacy. Next slide, please. We are talking about the launching of the digital financial deliverables from OJK. We have these products. The first one is talking about product scheme and price, and second one is about we're having also a storyboard of fintech lending, and then products about cyber ninja, and also customer support channel. The last one is talking about the customer protection. I think to some extent this area is very important. We're talking about these customer education and customer protection. So we try to encompass a lot of areas that hopefully that we are not talking just only about how we are enhancing the benefits of the fintech, but also we try to mitigate the risk because of the less understanding and educations of the fintechs in our community. So I stop here and then look forward for the Q&A session. Thank you so much for the opportunity again. And there's a info for contact us for the OJK regarding the digital financial innovation. Thank you so much for the opportunity. And back to you, the moderator. Thank you.
Thank you, Bapak Imansyah. Next, I would like to invite Ms. Sharmista Apaya from World Bank to deliver your presentation.
Thank you very much. Good evening, salam alaikum, and it's great to be here today. As I said, my name is Sharmista Apaya, and I'm joining you today from India. I'm going to talk to you today about balancing innovation and risk and some of the global trends that we're seeing as we do our work across the globe. Can we pull up my slides, please? Great.
Okay, ladies and gentlemen, I think we have some technical difficulties. We are going to go back to Ms. Sharmista and try to ask her to present her presentation later on. For now, I would like to invite...
Hello?
Yep.
Okay.
Great.
So can you hear our voice from here?
I can hear you. I can hear you.
Okay, so you may continue your presentation then.
Thank you. So the landscape of the financial marketplace has changed, as we all know, and fintech has really transformed the provision of financial services. Now, most of this has happened because of the disintermediation of the landscape itself and the removal of the middleman. So the rise of smartphones, the fact that we have more computing power, the fact that we have internet connectivity in a lot of places, that business models are changing, using the customer as the center and creating the business model around them as opposed to the other way around, has all caused the fintech and the financial sector marketplace to change. Next slide, please. So this positive impact of fintech can be traced back to about 2011. Since then, we've seen over 1 billion adults who have become account holders, and the unbanked population has fallen by 35%. Now, the silver bullet here has mainly been mobile money. And while globally, at the last count in 2017, we've still got 1.7 billion adults that have remained unbanked, fintech is helping to make financial services a lot more accessible. Now, just to understand the scale of the fintech and understand fintech in numbers, over the last 5 years, there's been 640 billion in total value of investments into fintech companies. The year-on-year growth has been about 20%. In terms of transactions, it has exceeded 7 trillion USD. And there's about 5 billion nearly 5 billion consumers who are using digital payments. And when we think that the world population is only about 7.8 billion, this is a very, very large, vast number. Next slide, please. So fintech has a number of benefits. It has benefits from increasing competition, improvements in speed, convenience, reductions in price, all of which leads to efficiency gains. And importantly, what it also does is that it leverages data and the connectivity of people, including with the underbanked and unbanked populations. So it brings benefits in terms of improved social welfare, economic efficiency. And importantly, as we're trying to maneuver this new world, we are actually seeing a lot more of regulators and supervisors and policymakers as a whole beginning to speak to each other, which is sort of a good value-added benefit of this new digital transformation. Next slide, please. So we did a study with Cambridge at the outset of COVID to look at what are the risks and the uptake of digital transformation across the world. And we found that regulators particularly see cybersecurity and operational fintech risks. So that's risk arising from third parties, such as, say, cloud computing or using of external sort of contractors. We saw that as increasing quite a bit. We're also seeing a lot more systemic risk. So things like the volatility of the market, impacts on regulatory objectives such as stability. Now, one of the reasons this might also happen is because of deposit flight. With a number of the new banks appearing in the marketplace, consumers tend to move their money from incumbent institutions to new banks, and they tend to move around quite often. So we're seeing that as a big stability risk as well. Obviously, one of the big risks that we're seeing is consumer protection, mainly because we're seeing a whole new facet of consumers who previously were not in the formal economy, coming into the formal economy and are having to deal with all of these new concepts and technologies. And two other risks that I'd like to mention is one on the regulatory perimeter, which is risks coming from, where does the responsibility of the regulator lie? How do the risks that come from outside or firms that were not previously within the mandate of the regulator, how are they being looked at? And the second one is cross-border issues. So especially with the business models that we're seeing today, there are lots of innovations in cross-border. So lending, trading, payment transactions, including things like obviously DLT, smart contracts. So this raises a number of questions about cross-jurisdictional compatibility of national legal frameworks. Next slide, please. So why are we seeing these increased risks? Now, digital disruption is not new. We have long been able to, summon movies, food, cars at the touch of a button. I'm talking about things like Spotify, Netflix, Ubers, all of these things that we've had for some time now. But the impact on the financial sector is different. So why is this? It's primarily because of three main reasons. One is that the knock-on impact of the macroeconomic impact because of financial integrity and stability issues. The challenges for policymakers, because this is such a new area, we're lacking the reliable amount of data because these businesses are unconventional, and recognize also that there is a need for legal amendments. And third is the bearing on consumer protection and the potential for fraud. We're also seeing in the markets that there is obviously a propensity to make a quick buck, a quick dollar. I'm sure some of you have been following the news lately, and you've seen, an easy profit. There was something called the Elon effect following Elon Musk, which is a Twitter joke that they had between the CEO of Tesla, Elon Musk, and McDonald's. And it basically made a meme coin jump to 85,000% just in a 24-hour period. So we're seeing these wild fluctuations in the market, which is also causing regulators to get, quite nervous. Next slide, please. But the fact remains that there continues to be an increase in fintech usage and the prioritization of fintech across the globe. So when we did this study, and this was, again, global reactions to COVID-19, we did this study, I think, about a year and a half ago. We saw that 45% of the regulators that we'd interviewed saw that there was an increased demand for fintech and digital payments and digital lending and microinsurance during the pandemic. Next slide, please. So we need to find a balance. We need to leverage the digital opportunity, but we also need to have a view of the inherent risks and the inherent policy trade-offs that exist, and policy trade-offs to primarily the regulatory objectives. Next slide, please. So policymakers have at their disposal a number of tools. We've heard of things like regulatory sandboxes, innovation hubs, straight up regulatory reform, some of the SupTech and RegTech areas, international coordination. So there are a number of tools that we've seen that regulators have at their fingertips. And we've seen various combinations of these in the client countries in which we work. Next slide, please. So a couple of the examples that we've seen where inclusion has been incorporated into how digital transformation can occur in a country is that in about 60% of the jurisdictions that we looked at, in a study that the World Bank and the IMF did, we saw that a number of countries had incorporated the use of fintech into their national financial inclusion strategies. So this includes things from rolling out a system for QR codes to incorporating POS terminals or embedded finance within their national financial inclusion program. The other thing that we're also seeing, and a way to incorporate sort of inclusion goals into the development of digital transformation, is the use of sandboxes. So certain countries like Bahrain, Malaysia, Sierra Leone, India, all have incorporated an inclusion aspect within their sandbox. And a good example is in Malaysia, where they were looking at eKYC and how they could actually promote eKYC for inclusion goals. And they tested that out in the sandbox. And then as the end result of that, they created new rules and regulations to allow that to work in the marketplace. Next slide, please. So some of the emerging themes we're seeing is that regulators can do one of three things. Either they can apply existing regulatory frameworks to new innovations, they can adjust their existing regulatory frameworks to accommodate new entrants, or they can create new regulatory frameworks. But the fact remains that regulation always tends to follow innovation. Regulators should follow the same activity, same risk, and hence same rules principle. But there also should be a view to proportionality. Regulation should be technology agnostic, and there has to be foundational elements such as data privacy laws, consumer protection laws, as well as things like interoperability and allowing for large value payments. So the infrastructure is key before any of this can really work. Next slide, please. So in 2018, as a response to a number of our client countries asking us how do they actually approach fintech, we developed the Bali Fintech Agenda. So these are guidelines for policymakers and regulators to address fintech's potential benefits and mitigating its risks. So there are 4 foundational elements here, which is about fostering and enabling the environment, strengthening the policy framework, addressing the risks, and very importantly, and something I wanted to bring attention to, is promoting international collaboration. So it has an entire pillar dedicated to communication between agencies and with industry. So it's calling for greater international cooperation and guidance on how to address emerging issues such as cybersecurity, data issues, this sale, and it cautions against premature policy responses. Next slide, please. One of the last few things I wanted to bring your attention to is the skills and technical know-how. This is something that I think really deserves mention, and one of the big challenges that regulators around the world are struggling with. When speaking, this graph depicts some of the types of technical assistance that regulators want. So whether it's in terms of data privacy, understanding AI methodology, big data analytics, because the world is moving so fast and it's moving faster at the pace than quite a few regulators can keep up to speed, the technical know-how tends to be one of the biggest, stumbling blocks for a number of regulators. So I'm going to quickly go over a couple of lessons learned before I conclude. In the short term, some of the lessons we've learned is that it is important to experiment with nimble regulatory measures. The facilitation and engagement between regulators and fintech industry is really important, as well as the transfer of knowledge between regulators, like domestically, as well as regulators internationally. And there is a considered important and increased need for regulatory innovation incentives. The tone from the top is important. And in the longer term, it's important to strengthen RegTech and SupTech capabilities, which is the use of technology for compliance, reporting, internal purposes of supervisors as well. The long-term transition to digital infrastructure, so trying to make sure that people are brought on board and it is easy, so it's a seamless process and the infrastructure is built up, as well as to consider the wider implications of digitization and financial services, including competition, exclusion, and financial literacy. The last slide, please. I'm just going to leave this slide up here because I know I'm out of time and we don't have time to go, but this is just a recap of some of the things I've said, to go over some of the main principles, that to adopt a principles-based approach, to be proportionate, to get the foundational right, the importance of looking at market maturity, stakeholder system, as well as the legal and regulatory framework and capacity before deciding on an approach forward. Thank you.
Thank you, Ms. Sharmista. Finally, I would like to invite our speaker from Better Than Cash Alliance, Dr. Ruth Goodwin-Groen.
Thank you. Bapak Deputy Governor Dani Jawono, Ibu Yunita Resmisari, Bapak Adi Budiarso, co-chairs Anna and Magda, co-panelists, ladies and gentlemen, it is my pleasure to be here this afternoon in Jakarta. And my message for all of us today is that the goal of this session to promote responsible business practices in fintech is within our power. Whether you are a regulator, whether you're a civil society advocate, as I see we have here today, whether you're a government policymaker, whether you're a financial service provider, one of the exciting fintechs that are happening in Indonesia, all of us have a role in creating a responsible digital payment ecosystem. We're in this together, and it is vital as we recover from COVID. And at the Better Than Cash Alliance, we fully support the Indonesian president, the G20 presidency, in this goal of creating responsible business practices in fintech as part of COVID recovery. And want to thank you for your leadership on this. This is such an important issue. And two stats, if we go to the next page, next slide, please. Many people before me have talked about the rapid rise of digital payments and the risks. And so two new stats that you might not have heard before. In East Asia Pacific, there's been, in 1 year, the GSMA said there's a 34% increase in mobile money. So in our region, in the Asia Pacific, that's a phenomenal increase. But also a survey last year found that 1 in 4 said they'd experienced some kind of online payment attempted a scam in some way. And so those real challenges, the real opportunities in rapid digitization of payments and the real risks in our region in particular have meant that now is the right time, that the Indonesian presidency is exactly right, that now's the right time to make sure that the digital payments and the fintech ecosystem follow responsible practices. So next slide, please. So these responsible practices, they are UN principles for responsible digital payments. You may know that the Secretary General launched his roadmap for digital cooperation and called for these kinds of principles. So we're responding to that. And these were developed with our members, with alliance members, of which Indonesia is one of our leading members. And of course, other G20 countries like Mexico and the government of India on the Troika. So these principles were launched last year by the Minister of Finance of India, and they include, as you can see on the screen in front of you, several of the principles that are essential for excellence in financial consumer protection that our colleagues at the World Bank have just identified, and OJK and OECD and other GPFI implementing partners. And so they include number 4, you can see safeguarding client data. You can see number 2 on protecting funds. Number 8 on recourse. Magda mentioned that earlier, how important recourse is, as well as, of course, transparency, number 6, particularly on pricing. So these are basic principles for that include in financial consumer protections. But today I want to also just expand it because of time and because we have an opportunity with all of these great stakeholders at the seminar today to talk about the wider ecosystem as well. And these include number 3, prioritizing women. I'll come back to that. Number 5, on ensuring products are designed for user needs. So the user is focused. Number 7, choice. Number 9, accountability across the whole value chain. And the number 1 encompasses it all, of treating users fairly. So these are the key principles for creating a responsible digital payment ecosystem that will allow us to recover from COVID. And I want to just go to focus on prioritizing women, because the Deputy Governor identified that women were, if you remember his slides, he spoke about how women had been affected by the pandemic. For example, in sectors where women are majority employed, such as the ready-made garment sector, as we know in Southeast Asia and South Asia, that they completely stopped. Their income was completely stopped. And so governments had to take action incredibly quickly to be able to just save those women's income. Otherwise, their families would not have been able to eat. And so women have been massively affected by the pandemic in sectors where they are majority employed. Also, as was noted earlier, in Indonesia, for example, that women are majority in micro enterprises, and those were massively hit as a result of the lockdowns. And so informal sector businesses run by women and families were devastated from the pandemic. And thirdly, women who have majority caring responsibilities in the family, that increased with school shut down and with family members getting sick. And so the focus on prioritizing women is not just good practice on financial inclusion and good economic sense for growing an economy, it's vital for recovery, as the G20 presidency is recognizing. And of course, the Minister of Finance of India, Sri Mulyani, has led on reaching financial equality because she understands how important this is to drive recovery following the pandemic. There's a great example from Ethiopia I'm going to come to in a minute, but I just want to say that the importance of designing for user needs, this is something that all of us can be part of. I see on the chat that there are youth activists here, and so making sure that the engaging with both the providers and the fintechs and the regulators to ensure there are products appropriate for youth-run businesses is vital. So that there's choice. You're not stuck into one option, which doesn't give you appropriateness for your needs, whether you're running a small business or whether you're managing your family business. An accountability. We all know we've been on a phone trying to solve a problem and everyone points the finger the other way. It's somebody else's problem. Oh, the network went down. Oh, it's the bank's problem. Oh, it's somebody else. Can we please have, we're calling for accountability across the whole value chain on digital payments, so we have a responsible ecosystem. And the principle of treating everyone fairly across this, we all know that this is what we want to achieve. And so we need to keep that as our overarching principle. The next slide, please. We know that these underserved MSMEs that have been the priority for the Indonesians, especially those run by women and youth, are what will benefit from these principles. So I've given examples for that. And just to remind everyone more broadly, McKinsey has said that there are 500 million MSMEs that have been impacted negatively as a result of the pandemic. So this is not a small problem. This is a big problem that we have to solve together. And this is how consistent with the high-level principles, as colleagues earlier have noted, such as establishing responsible digital financial practices, which is what we're advocating for today. So next slide, please. The Ethiopian example, we're a global partnership for financial inclusion, and Ethiopia is a member, and they've made a bold commitment to reduce the gender gap in financial services by 50% in the next 5 years, hopefully earlier, but that's their goal. And they are collecting gender disaggregated data so they can track it, so they know, and address women's lack of IDs and access to mobiles and connectivity so they can be part of the digital payments ecosystem. And so members of the Better Than Cash Alliance, Unilever and partners in Ethiopia have a specific focus on digitizing their Shakti program, which is women and family-owned businesses, in order to be able to help them grow. And so this is an example of a government strategy, of the National Digital Payment Strategy, that has a very clear commitment to women and women-owned SMEs and youth, and that then partners in the country being able to take action. So this exemplifies the whole ecosystem approach. Of course, they're not there yet, but it's a very important step they're taking. And then I could not leave without the other example, and this one from India. The next slide, please. Our colleagues from India and the GPFI will probably add to this later, but the RBI has just licensed a new financial entity called an account aggregator that ensures that client data is safeguarded, as well as being able to use it in a way that allows them access to a range of financial services. And so these kind of innovations are vital to be able to help SMEs grow their businesses in a way that is safe, protects their data, and protects their finances. So there are lots more recommendations. Responsiblepayments.org, if you go to the last slide, please. Responsiblepayments.org, and I'm sure a colleague of mine will put it in the chat as well, so you can link to it. There's 60 pages of recommendations that you can read. This is very much just the highlights, and I would urge you to, whoever you are, whatever background you're from here today, to take action to create a responsible digital payments ecosystem. So without further ado, I want to thank the Indonesian presidency and colleagues today, and look forward to a very exciting rest of the session and GPFI. Terima kasih banyak.
Terima kasih, Dr. Ruth, for your presentation. Ladies and gentlemen, from our speakers, we have learned that Along with the rapid digitalization in the financial sectors, there are some trade-offs between policy objectives and potential risk. Then we also learned that accordingly, regulators need to develop a supervision framework as well as collaborate with the industry, association, and related stakeholders. And finally, the UN principles of responsible digital payments can be adopted to address these challenges of digitalization and mitigating the risk to encourage economic inclusion. Now, I would like to ask a question to all the speakers that you may respond with a brief answer. In your experiences as a regulator or standard setting bodies, what are the most challenging aspects in implementing the policies which could effectively promote innovation while at the same time able to control the related risk? For Bapak Imansyah from OJK, you may wish to share Indonesian experiences. And to Ms. Sharmista and Dr. Ruth, you may like to share the experiences from the global perspective, including the developed countries' experiences. Bapak Imansyah, you may go first.
Well, thank you for the questions. I think to answer it in a very quick way, we may consider two things. One is maybe we can replicate what we've done already with the incumbent industry. And the second one is actually, and we keep going on monitoring how that will affecting the business of the fintech. And the other one is we keep on do some financial literacy to mitigate the risk, not only for the fintech itself, but also for the our community. And the other one is actually we are trying to build up a more collaboration, strong collaboration with the association, as we know that to some extent our regulation right now is really not really touch the issue of the fintech. That's why I think the government now having also an initiative for having or drafting the law on the how we are improving this our financial sector, including as well the fintech area. So I think that's what we are trying to do the best right now, just to have the balance between innovations, we're facilitating, we're accommodating the innovations, and we're very much aware with those development right now. But on the other hand, because as a regulator, we're very much concerned as well with financial stability, then we are talking about risk, then I think there's more communications with the FinTech Association, with other related government, will be very much crucial for all of us, how we are having these FinTechs, and we have the the benefit, and at the same time we can mitigate the risk. That's my answer. Thank you.
Thank you. Thank you, Bapak Imansyah, for sharing the Indonesian experience. Now I would like to invite Ms. Sharmista to share your experience.
Thank you. I agree with a lot of what Bapak Imansyah said. Some of the other things that we're seeing quite often is that because innovation tends to move a lot faster than regulation, one of the big challenges is actually keeping up with that. And I think regulators sometimes maybe not usefully try and keep up with the innovation, but the normal process is that regulation tends to follow innovation. And I think that's okay. And regulators should recognize that that's okay as well. So in the same vein as well, I think as regulators, they're sort of, looked up to by the market. But regulators should also be willing to fail sometimes. So I used to run the FinTech Accelerator at the Bank of England. And one of the good things that we saw was that even if something failed, if something didn't go according to plan, that was a learning for us. So we were learning by doing. So what the challenges that regulators face quite often is trying to create very big projects and big, setting up really big frameworks. But I would say that agility, starting small, failing fast, and then actually changing what they're doing is actually really, really important in what they should do. And maybe the last thing that I will mention is about the silos that they create. Now, traditionally, again, having been a regulator myself, this is something I know, firsthand, is that we tend to sort of surround ourselves with rather large walls. So you don't actually know very well what the industry is thinking. So breaking down those silos and having more of a conversation with the fintechs in the market is really, really important. And I think that's that's one of the easy ways in which you can actually understand what's happening in the market. But currently, it's a bit of a blind spot for regulators. I'll stop there.
Right. Thank you, Ms. Harmista. Now I would like to invite Dr. Ruth.
Thank you. And I agree with my esteemed colleagues. And so just to add on rather than repeat, I think that expanding the dialogue is fantastic, and even more to listen to consumers, that because they are the ones who are on the front lines of risk, and to hear from them as well as to the fintechs is really important. That's why we were talking about an ecosystem where everybody is important, the financial service providers, the regulators, as well as the consumers. And for the Indonesian presidency particularly, who's focusing on the needs of MSMEs, particularly those run by women and youth, listening to what they need, what the challenges that they're facing, how innovation can help them, is going to help us all be better regulators and policymakers. Thank you.
Thank you, speakers, for answering the question and shared your experiences with the audience. Let's give a big applause to our speakers, ladies and gentlemen. Ladies and gentlemen, for participants who wish to ask questions to all speakers, you may post your questions in the chat column, stating your name and to whom your question is addressed. We will have a Q&A session with all speakers shortly after the second panel discussion. Next, we will watch together a video presenting the Financial and Economic Inclusion Program in Bank Indonesia. Targeting the social assistance beneficiaries, Bank Indonesia promotes financial and economic inclusion of these vulnerable groups to build their economic empowerment by assisting them to become resilient micro-entrepreneurs. Please enjoy the video.
The COVID-19 pandemic has negatively impacted the vulnerable groups, including women, youth, and micro, small, and medium enterprises. Countries worldwide use social assistance as a response to the COVID-19 pandemic. Delivered through digital payment or basic bank account, this social assistance opens the door to formal financial system. Hence, the financial products and services could be utilized to cope with the financial struggle. Financial inclusion and digitalization opens more opportunities toward greater economic inclusion. Bank Indonesia promote financial inclusion of the vulnerable groups through a program that integrates economic and financial inclusion. It aims to encourage the vulnerable groups to grow potential business opportunities and utilizing financial products and services available. The pilot project financial literacy, improving business capacity, and developing a business entity. Financial education is implemented through financial management training and introduction to financial products, as well as consumer protection to improve financial literacy. Business capacity development is implemented through technical assistance and business management training in order to increase productivity. Business entity development is carried out to strengthen the business organization run by the target group. After participating in the intensive training and assistance, the target groups are expected to have better understanding of financial planning management and are able to utilize formal financial services, manage the business better, form joint business group, and grow potential local champions. To build new and resilient micro-entrepreneurs and promote economic empowerment. Economic and financial inclusion program to vulnerable groups will continue to be developed and replicated in other regions all over Indonesia. This program is expected to support a stronger and more equitable economic recovery, in line with the theme of the Indonesia G20 presidency. Recover together. Recover stronger.
Ladies and gentlemen, now we are going to continue to our second panel discussion, which will discuss the theme of fintech role in supporting MSME digitalization and accelerating financial and economic inclusion. And we have already joined by Mr. Budi Ganda Subrata, Managing Director of GoPay and Group Head Compliance of GoTo Financial, and Mr. Rahul Gupta, CEO of Avanti Finance. Thank you, speakers, for joining us today. In this session, we are going to have each of you talk for 7 minutes, followed by a short Q&A session with moderator. You can also see the timer on your bottom left screen. Now, I would like to invite Mr. Budi Ganda Subrata from GoTo to share your presentation.
Thank you. Good afternoon, good evening, good morning from wherever you are. Glad to be here. Very happy to participate in today's event on digital financial inclusion. I would like to also extend my greeting to Bapak Doni Pejuono, the Deputy Governor of Bank Indonesia, Head of SMEs Development and Consumer Protection Department, Ibu Yunita Respisari, Head of Center of Financial Sector Policy of the Indonesian Ministry of Finance, Bapak Adi Budiarso, Mrs. Magda Bianco, Representative Bank of Italy, Mrs. Anna Zainachova, Ministry of Finance of Russian Federation, fellow panelists, Bapak Iman Shah, Mrs. Sharmista, Dr. Ruth Goodwin Harun, Rahul, good afternoon to you all. I would probably start by sharing about what we have done today in GoTo. So if you can go to the slide, next slide, please. So I would like to start off with a feeling of gratitude and feeling humbled also with the opportunity that Indonesia has been appointed as the president for G20. I think this is also a good opportunity to showcase really what Indonesia is all about, and also to share some of the learnings, and also perhaps we can learn from all the G20 members of some of the digitalization that has been done in each of the respective countries. So to share a bit about Indonesia, there's a lot of opportunity in the digital age today. As you can see in my deck here, there's a lot of potential, especially in Indonesia as a country. I'll start with the bottom statistics. Indonesia being a country that is heavily populated, especially with younger generations. We have roughly more than 270 million populations in Indonesia, where about 37% are new customer in the Indonesian economy services in 2020. So there's definitely room for growth there. There's about 47 million adults that are currently underbanked, and 92 million that is currently unbanked. The average internet usage is about 3 to 4 hours a day, and there's about more than half of the population are working in the informal sector. Now, as you can see on the right-hand side, the projected Indonesian internet economy in 2025 is predicted to reach about 146 billion US dollars. So clearly, there's a lot of opportunities to be achieved here. Next slide, please. Now, in GoTo, we also understand and we are trying to help MSMEs and partners to recover and grow. I think this is also consistent with the theme today. How can we recover together and stronger? As you can see, 99% of Indonesian economic structure is based on MSMEs, and about 95% unfortunately experienced revenue decline during the pandemic. 35% of MSMEs experienced difficulties in selling their products, whereas 34% of MSMEs had 40 to 90% of turnover reduction during the pandemics. So it's clear to see that the pandemic has proven to be a challenge to be a lot of the MSMEs. And not only that, MSMEs, as mentioned previously, is the key economic driver for Indonesia economy. Out of 65 million MSMEs that are currently registered today in Indonesia, 21% is already implemented digitalization. So it is clear to see that there's a lot of opportunities for them to be digitized and for them to have access to more financial products and payment services digitally. Now we have helped MSMEs and partners to recover and grow because using us as an example within the GoTo group, Gojek, which is our on-demand service provider, our food delivery service provider, GoFood, has helped out, or at least 4 out of 5 MSMEs that believe that GoFood has grown their business. And thankfully, some of the good news that we've seen today is that our driver partners have been remained resilient during the pandemic. 4 out of 5 drivers still have income to support their families through partnership with Gojek. So even though there's a lot of challenges, especially in quote unquote the offline sector, food delivery, some of our other services are still pretty much at a healthy level, so that it can still remain supporting our MSMEs as well as our driver partners. Next slide, please. So how do we support? So in the GoTo ecosystem, we do have a lot of suites of products that supports our MSMEs. GoFood, GoStore on marketing, and for food delivery or order processing, we have a very simplified tool to be used in social media called Selly. We have digital payments on both consumer and merchant side in GoPay and Midtrans. Logistics to help MSMEs to deliver their products, business operations, point of sale services, as well as e-commerce marketplace in the form of Tokopedia. We do have a lot of communities to help these MSMEs as well. So these are some of the examples of communities such as meetups, virtual meetups and training initiatives, as well as some of the government-wide initiatives such as Bangga Buatan Indonesia or Proudly Made in Indonesia, to ensure that we partner with various ministries to encourage local MSMEs through these campaigns. Next slide, please. And this is some of the use cases that we've done throughout the day on how we have helped merchants and consumers. I won't spend time on the consumers, but mostly on the merchants, which are mostly MSMEs, on starting to check their incoming orders, respond to customer queries, all the way until analyzing bookkeeping and sales records, as well as offering working capital loans through some of our partners within the ecosystem. So we've become basically the go-to ecosystem that supports not only consumers, but also MSME merchants on their daily needs. Next slide. So I'll go on a bit quickly. This is basically some of the technologies that we use. So I'm going to skip this slide and probably close, given that I only have half a minute left. How do we mitigate risk and also protect our business to ensure that we mitigate some of the risk? Next slide, please. Next slide. So I'll just skip this slide. This is some of the examples that we've done, especially with integrating with a lot of third-party partners, especially investment products, insurance. We also have integration with some of our digital banking partners, namely Bank Jago, to help ensure we push some of these digital finance products to our customers as well as MSMEs. I've run out of time, so happy to answer more questions during the Q&A sessions today. But again, just to close off, these are some of the full layers of protection to manage risk. So through education, technology, and protection, some of the initiatives that we've done. With that, thank you very much. Looking forward to the discussions and Q&A sessions today. Over to you, good moderator. Thank you so much.
Thank you, Mr. Budi Ganda Subrata from GoTo. Next, I would like to invite Mr. Rahul Gupta from Avanti Finance India.
Thank you, Pak Budi, and thanks for the invite today. It's a pleasure to be here. Congratulations to Indonesia for hosting this summit, and look forward to interaction with the other industry leaders, thought leaders, regulators, Ministry of Finance, etc. And with that, if I may request that we turn on the slides, please. So, Avanti has been conceived to be a population scale financial inclusion platform. And the vision that we have is that in a country where there are about 100 million households, or about 500 million to 600 million people who are currently excluded out of the financial services system, either are purely unserved or underserved, that they get an opportunity of accessing financial services in an affordable and frictionless manner using a population scale digital spine and platform that we are building. But before we even go there, what I would like to share is the infrastructure that the government in India, along with the private sector, has built, which really is making the sort of fintech moment a truly, it's been an inflection point for the last couple of years actually now, and we are having our planet scale moments in India now. So, from a country where we used to talk about, the challenges of identity because people didn't have a document to prove who they were if they moved from one location to the other, we have one of the world's best biometric based identity layers today in the form of Aadhaar, where 1.3 billion people in the country now are enrolled in Aadhaar, and where there are hundreds of millions of authentication transactions that happened via Aadhaar. And this is terrific because wherever the migrant population travels all across the country in search of livelihoods, etc. And this is something that gives them an identity and fulfills norms of KYC, etc. Privacy and data is also democratized, as are other avenues such as the payment layer. So through UPI, which now does over 4 billion transactions a month, and this is a payment gateway created by the National Payments Corporation of India, which came into being 4 or 5 years ago, and now is looking at the next level where it's estimated that digital payments on a daily basis might go up in the next 3 to 4 years of up to 1 billion a day. So truly, of the financial services is poised for a quantum jump, and these digital layers that have been built allow entities like Avanti to have the kind of ambition that we have and build truly digital first models that will empower the underserved and unserved populations. Next slide, please. So we are trying to build a digital rural neobank. And I would like to emphasize this point because a lot of the innovation that is happening in the country today is centered around the same 100 million consumers. So if we look at the e-commerce play, or we look at other such associated industries, lots of innovation, a lot of private capital coming in, but it's essentially not going down to the level of users that we want to serve, which are currently out of the formal financial services systems. So we want to build a population scale model, which will be based on the premises of being touchless, cashless, and presenceless, which I'll talk about shortly in the next slide, and will incorporate hyperlocal inputs so that the products and services that we deliver are actually fit and proper for the communities that we serve, and are built upon crowdsourcing information layered on an extremely agile technology platform that we are currently building. Maybe go to the next chart, please. So we have a unique model, and one is in order to reach the target segment that we are looking to serve, we have built a network of partners across the country. We are currently in 23 states, serving over 240 districts, where these partners do help us access the customers, they manage the credit operations, and they help us manage risk because a lot of these customers are very data dark. So these community linked partners help us overcome that because they know people at a pretty intimate level. The product development is done on the platform, and it is layered in a way so that it can be done on the fly. And it is all done in a digital first model, which is paperless, presenceless, and cashless, which empowers the users as well as provides them a very frictionless experience, which over a period of time will also end up lowering the cost of access to finance for our users. So our partners typically are people who are well embedded in the community. They will understand the needs of people in the community. They will help us understand what kind of financial products are required. If it is an MSME in agri-allied space, they will know exactly what the cash flows would be, and therefore what should be the kind of repayment history. Should it be fortnightly? Should it be bullet payment? Should it be monthly? They will know exactly the kind of input and output linkages which will ensure that people's incomes are built in a sustainable manner, and the financial health system that they are looking for comes to them, and helps us in a very, very vast outreach, because this community-centric models is which actually serves, the tens of millions of people who are currently excluded out of the system. So they are connected with them, and that helps us get to them. So this is the basic model. I'll pause there, and happy to take any further questions at the Q&A.
Thank you, Mr. Budi and Mr. Rahul. We learned many useful information from your presentations. Namely, it is deemed important to build the ecosystem and the synergy in supporting MSME digitalization and accelerating financial and economic inclusion. And then from GoTo, we could learn a good practice of the ecosystem to address MSMEs issues in financial access, markets, and logistics in Indonesia. And from Avanti Finance's business model, we could learn a good example of operating credit to the community, particularly MSMEs and women in India. Now, before we go to our next agenda, I would like to ask both of you one question. It is understood how important innovations are for fintech. However, new innovations may come with new risk. How do you address this risk early on, especially because you are also dealing with the most vulnerable part of the society? Mr. Budi, you may answer first.
Thank you. I think that's a very good and difficult question. This is why we always think that education is important, because as you rightly mentioned, financial inclusion, we are introducing a lot of innovations, a lot of new technologies, but at the same time, our quote-unquote target may be the most vulnerable segment of the market. So I think you need to pair that with education, because the three main principles of security, right? People, technology, and processes. While probably as a company, we can provide the technology as well as the processes to ensure that some of these risks are mitigated, ultimately, it all boils down also from the people. So we believe that with the new technologies, while we are adhering to some of the key principles such as AML-CFT, enterprise risk management, consumer protections, information security management standards, there are several elements, especially when it comes to introducing new technologies, that needs to be covered with education, financial literation. So one of our first few steps, especially in introducing these innovations, is to ensure that a lot of trainings, a lot of financial literacy initiatives, a lot of educations are being targeted to a lot of these people. So that's very high level, but I hope that answers your question, because it is one of the most critical aspects of what we are doing today. And we want to ensure that whenever we push a lot of these innovation to the market, it is being properly balanced and paired with a lot of educations and as well as literacy towards our customers.
Thank you, Mr. Budi. So education is the key. What about in India, Mr. Rahul?
So I agree with everything that Pak Budi said, and all of that resonates very well in India as well. I would just like to add a couple of further thoughts based on the learnings that we've had. One is for example, the Avanti model. It's executed in an assisted manner, because the customers that we're trying to serve in a digital first manner may not be very savvy in their own digital prowess. So there is a big element of trust in the people who enable them to get these services and help them, onboard onto the Avanti platform, for example. So we have to be very careful that the partners that we have and the network that we build through the country, and this would apply in any other country, not just in India, are folks from the community, are organizations from the community which have high trust levels with the users that we're trying to serve. So that is one. The second important thing also we find is the element of operational risk. So whilst you have this element of trust bestowed on partners who are your ambassadors, you also have to have your own independent systems to check whether the customers understand the TNCs, whether there is no, application of costs which are added on in a non-transparent manner, whether the funds, for example, if it's a credit product is given to them, is actually being used for the purpose it was intended. And these can also be done in a fairly simple, sort of operating risk fashion of making periodic phone calls, sending SMSs. Of course, we have, as far as the users go, we have a lot of data on them, but also, things like on-field audits, etc., where the process becomes somewhat of a combination of, adding a slight layer of physical to it, because you are protecting the consumer rights here. And in our case, we truly believe that we are custodians of the user's data, and we will not use any data of the users without their consent, and we will never weaponize their data to monetize for our gains.
Thank you, Mr. Rahul and Mr. Budi, for answering the questions. Ladies and gentlemen, let us give a good round of applause to all speakers. Ladies and gentlemen, we now arrive at the Q&A session. Allow me to invite all speakers to join this session. Unfortunately, Dr. Ruth will not be joining this session, but surely we could still engage in fruitful discussion. Let me remind all participants who wish to ask questions of speakers that you may post your questions in the chat column, stating your name and to whom your question is addressed. I see that we have one audience who is ready to ask question live directly to our speakers. You have 1.5 minutes to state your questions. We have Mr. Nicholas Drury from Cambridge University. You may start your question.
Thank you very much indeed. It was really a question about data. I think obviously we're all trying to build the ecosystem for MSMEs and also for other alternative finance participants in a safe way without really damaging the positive impacts of innovation. And I just wondered, in a country or in countries the size of Indonesia, as well as India and others, particularly in our region, how much progress we think we're making in terms of collecting the right level of data, so the quantity of data, as well as the quality of data. And this is a general question for all of our speakers. Thank you very much.
Thank you for the question. So, because you also mentioned that Indonesian case, maybe for now we can ask from OJK, Bapak Imansyah, to answer that question.
Okay, thank you for the questions, Nick. Things in our case for Indonesia, as I mentioned before, yes, we having a pretty rapid development of the fintechs, and then we can see, let's say, I take the case of the P2P lending. The development of financing using the P2P lending platform is amazing for us. It's something that replacing the role of the incumbent banks. And at the same time, we also can see that the quality of the lending is relatively good because of this number of default is quite low. So I think in the future, these practices will be very much continue. But at the same time, we try to improve as well the quality of the platform itself. So it means that at the same time, so we are now amending our regulations on the P2P lending. on one aspect that we are looking right now is about the capital of these P2P lending platforms, and as well as how we are doing the licensing process. And also, we very much also very concerned with the risk management, as well as the the quality of the player itself. So, and along with that, things we have now we are building a very intensive collaboration with the associations, because I think to some extent there's still a lot of issue of these practices of this P2P lending that not really consider good practices, because they are using now any features within the smartphone for collections. So I think we issue also the policy that the platform only can access the camera, the microphone, and location. So in short, we call it this camilan. The camilan in Indonesia is snack. It's actually in English. So something that it's a learning curve process for ourselves and the community and the associations and all the stakeholders within the ecosystem of the fintech platform. But it's not stopped till there. Now in the future, I think so to some extent we try to see whether our regulation also very much still fit with the development of this fintech era. So meaning that how you are defining the crisis, how you finding the financial system stability in the future, I think we will be adjusted as well. So it means that still a lot of efforts that all stakeholders hand in hand, we talk together, we have a very close collaboration. That's I think the key of how we are going forward with this fintech ecosystems and also the industry. The incumbent as well will be included as well in our communications, Nick. So I think, yes, I think it's also similar to other countries as well. Thank you. I'll stop here and then over to you again, moderator.
Thank you, Bapak
Thank
Imansyah.
you.
Now I would like to invite Ms. Harmista Apaya to give a brief answer to this question.
Thank you. I think the question, and correct me if I've got it wrong, was more about the use of data and where are we getting the data from? Can I just clarify that was what you're focusing on?
Yes, it was really whether we think we have sufficient quality and quantity of data.
So there are some sources of MSME data. So for example, the UFA data portal, which is the Universal Financial Access. There is information on the use of electronic payments by MSME retailers. There's some other work that the SME Finance Forum has done, and I think one of my colleagues from there is online as well. And they've collected some information. There's more specifically, there's the OECD SME scoreboard, which is purely based on more like supply side data. There's some other data sources that have been collected by the IMF, which is on the Financial Access Survey, to collect SME data and to finance data from central banks. So I will agree that there is a dearth in data, like there is for quite a few of the other things that we within the fintech space, but just in terms of the transaction volume and the type, both on the supply side and the demand side, there is some quantitative information. Where we might be lacking a little bit more is on the qualitative information. And that's where things like some of the pilots that we're doing in different countries like Ethiopia and India, trying to understand issues of SMEs come up, but there is nothing that has been done on almost a whole-scale basis for that. Thank you. But like, I mean, this is a focus of the G20, the Indonesian presidency. So hopefully we'll see some good results, and it's great to hear questions like this, because then we see what the gaps are, especially in the markets, of these areas that we can take away and work on. So thank you for the question.
Thank you, Ms. Harmista, for answering the question. Now I would like to ask Mr. Budi to give your response.
Thank you. Hi, Nick. Always good to see you. I think your question also Let me just answer it briefly. I think we have, in terms of data quality and collection, especially in Indonesia, we have all the right pieces already. In terms of quality, all of the identity data, the ID card is already centralized as well as validated in a single source of truth. So the government has a database which is maintained by the Ministry of Homeland Affairs. We also, so it enables the possibility to do eKYC. So that means if you want to onboard a user or an MSMEs for certain financial products such as loans, insurance, investment products, payment services, we can do eKYC. It is also supported by a very progressive regulation from both Bank Indonesia as well as OJK that enables digital KYC and a lot of risk-based approach to fulfill some of the AML CFT principles as well. For example, customer due diligence, enhanced due diligence, risk rating based on digital footprints and data. So those are enabled and as well as allowed by the regulation. So as I said earlier, all of the right building blocks are already there. And I think some of the challenges, especially in our case, GoTo as an ecosystem, we are also partnering with third-party service providers such as insurance and digital banks. So the idea is how can we provide a quote-unquote seamless onboarding experience for our MSMEs? For example, their data are collected and maintained by one of our subsidiaries. And then in order to offer them another financial product such as financing or open up a bank account, like a corporate bank account, for example, how can we reduce the cumbersome or repetitive process of KYC by reusing some of the existing data that is already there? So the regulatory framework, especially on data portability, user consent, transparency is also there. So those are some of the items that we try to maintain to ensure that data portability, data governance are being maintained between these different entities, compliant to different regulations under Bank Indonesia and OJK, specifically for payments and financial services, as well as revalidating the data towards the single source of truth, which is the Ministry of Homeland Affairs of Indonesia. It's the Dirjen Dukcapil under the Kementerian Dalam Negeri. So those are the principles that we're trying to fulfill. And as I said earlier, this also increased the validity and the quality of the data, and compare that with some of the credit scoring capability that some of the fintech provider already has. Hopefully we can increase the quality of the data and also the validity of the data itself. Thank you.
Thank you, Mr. Budi. Now I'm going to invite Mr. Rahul Gupta to give your response for the case in India.
So I think it's a case of a glass half full. The reason why the MSME segment continues to be quite underserved is, of course, the ability to calculate, do a cash flow based lending system or design products in that way. And of course, being able to ascertain the verifiable information. Now, there is a lot of progress which has been made because some of the MSMEs are, of course, individual-led or they're very small organizations. And as I alluded to earlier, the identity ubiquitousness which has been created with Aadhaar, of course, has gone a long way. You also have everybody today who has a bank account. So those are two important elements. But then, of course, where it comes to documents relating to verifiable incomes, etc., which will enable lenders to take more risk, increase ticket size, increase the overall supply of credit, I think there's still a long, long way to go. There have been some very progressive steps that have been taken, and I had mentioned it earlier. I think Dr. Ruth had mentioned it. The architecture that has been created of the account aggregator system, which allows a consolidation of data across insurance, financial providers, utilities, etc., into a centralized platform of a financial service provider, who themselves, their access to it is pretty much blind. But through that central spine, you can share that data with customer consent to different people who are providing products. Also, with more and more people in India becoming taxpayers, the data that you have related to income tax, and also an important step forward has been the data related to the GST, because India has become one central market. Earlier, you had every state which would have its own GST, and now it's a central federated system. So the consolidation of that also helps. So yes, certainly very progressive actions have been taken, but still a fair amount, a long way to go before one can fully and confidently say that the capital that is required to be funneled into MSMEs will be sort of structurally enabled, and which comes back to the information that I was sharing, which is the community-linked ecosystems, which therefore help to override in a very local and hyper-local manner some of the data darkness that may exist with the entities, because they understand the consumers to a fairly intimate level at a local level.
Thank you, Mr. Rahul, and thank you to all speakers for answering the questions, and also Mr. Nikos Duri for your question. Ladies and gentlemen, now we still have time for more questions. Now I will read some of the questions that were coming in through our chat column. We have one question from Lorraine Sumuel from UKD LSM and Satrio Santoso from Zurich Topaz Live. This question is for all speakers. We will give 2 minutes for each speaker to answer the question. And the question is, how should we manage cyber security, including identity security, in digital financial transactions, both from the perspective of policymakers as well as industry? So maybe I will give the opportunity to Pak Imansyah first.
I have a suggestion to the moderator. Rather than everybody answer the same question, let's spread the questions a bit between the panelists so that more people's questions are answered.
Thank you for the suggestion. But for now, we are going to give the floor to the speakers first to answer the question that are already coming in. Thank you for the suggestion. Now, Bapak Imansyah, can you please answer the question?
Yes, thank you for the questions. At this moment, I myself thinking about to treat this cyber risk as a standalone type of risk in the area of the risk management framework. So as we have right now, as of today, on our regulation, we only consider this is part of the operational risk. But later on, because of this increasing number of cyber threat, and then we are thinking about whether it's something that quite possible to come up with another cushions for mitigating the loss that may potentially come from these cyber risks. I think that's really in the future that we're going to take and the initiative to have the study whether this can be like a standalone type of risk in our financial sector. I think that's really what we are, including as well other effort. I think that's really mitigating the cyber risk, not an easy effort. It's a responsibility for all stakeholders. But from our view, I think in the future we try to see whether it can becoming like an alternative for us as well to consider it as a standalone type of risk in the risk management framework. Thank you.
Thank you, Bapak Imansyah, for answering the question. Now I'm going to go to Goto. Pak Budi, maybe you can answer this question.
Yeah, I think there are several ways, right? As I said earlier, it all boils down to the basic principles of education, processes, and technology. I think as a company or a private sector, we do have the responsibility to maintain the security of private data. We are not the owners of customers nor the merchants' data. We're merely custodians. So there's a lot of like technology certifications and standards like ISO, PCI DSS, and whatnot that can ensure that some of the best practices are being maintained. On top of that, some of the policy and regulatory framework, especially with regards to data sharing, data portability. How can we reuse that data, especially for other purposes such as cross-selling, marketing, and whatnot? That is very important to be maintained as well as to pay attention to. So there's a lot of different aspects, especially from a technology standpoint, policy, as well as people. So to ensure that these are properly implemented within the organization and beyond. So this is why the education process as well as the awareness is important. We do spend a great deal of internal advocacy and education, especially when it comes to data governance, to ensure that every aspect within the organization, every function is aware of their responsibility of being a custodian of users' data and merchants' data to ensure that the confidentiality is being maintained, as well as the transparency and the consent to our users and merchants are being conveyed as well. So those are some of the high-level efforts that we've done within the organization, as well as the policy internally, as well as the regulatory framework that has been set up to a great effect by BI, OJK, as well as other regulators. So I'll stop there. Thank you very much.
Thank you, Mr. Budi, for answering the question. Now we have another question coming in. This is from Jessica Alfaro from SME Finance Forum. This is a question for World Bank and Avanti Finance. The question is really interesting examples from speakers. Would love to learn more about the importance of financial health and how financial education or literacy is driven alongside of financial inclusion. Ms. Harmista, maybe you can respond to that first.
Thank you. Thanks for that question, Jessica. I think that's a really, really important point. And the fact that financial literacy especially is of vital importance, and I think regulators around the world are recognizing this. And we're using this as sort of one of the key pillars, because one of the key risks, and maybe something that I didn't touch on during my presentation, is that there is a big exclusion risk. I've obviously heard my colleagues on the panel talk about India and the number of bank accounts that we have, and the Aadhaar card and all of this. But one of the big facts that remain is that financial literacy is quite low. So actually getting a lot of people to use these applications does not seem to be easy. That being said, digital literacy and numeric literacy is high, even though sort of literacy as a whole might not be so good. So there are a number of things that policymakers as a whole are thinking about. There are funds that are being set up purely for to run campaigns on financial health. But it is, I guess, there's no easy way in how this can happen. One of the good things that with fintech is that like some of us have mentioned before, the consumer is at the center of these business models. So having the consumer at the center makes some of these applications and the user interface easy. So it helps us a little bit, but there is still quite a bit of work to be done on things like redress mechanisms, insolvency procedures, the kinds of disclosures that are given to consumers. So there is still some work to be done on that. And I think governments are looking for new ways in which health can be improved. Thank you.
Thank you. Now I would like to invite Mr. Rahul to answer this question.
It's an extremely relevant question and no easy answer to that. It's a continuous journey here. So if you look at, despite the sort of explosion in digital adoption in India, when we go to customers at the bottom of the pyramid, for example, the customers that Avanti is trying to solve for, we have about only a third of our users who have smartphones. So there is a pretty high digital divide that still exists. And that has to be looked at, from a series of actions, shorter term, medium term, and long term, as people progressively, enhance their own digital savviness, but also, the proliferation of smartphones, etc., increases. So from us, I think from an organization point of view, one is, of course, making sure that the fair practices lending is inbuilt into the platform itself and is codified into the platform, so there is no chances of misuse. So that, I would say, is on the control mechanism. When you have intermediaries in between as well, then you need to have a very strong control and operating risk framework to ensure that your policies are being followed in spirit and letter. And then we come to the most important person here, who is the consumer, where we feel in a digital way the acceleration of education is possible, because today when the users are on your app, or they can be contacted via SMS, with the agreements themselves are in terms of electronic form, that ability to interact and engage with your user on financial education and literacy is enhanced. So just some of the steps with lots more to do.
Thank you, Mr. Rahul. And thank you all speakers and participants who have joined us this afternoon. Let's give a big applause to all of you. Ladies and gentlemen, together we have followed a fruitful discussion on digital financial inclusion from both regulatory and industry perspective. I would like to conclude some key takeaway points from the speakers. 1. Acceleration of digital finance could increase the opportunity of economic recovery for vulnerable groups. 2. The spurring innovation in digital finance should be responded wisely by the regulator and industry as well as consumers. And finally, collaboration between regulators, industry, association, and all related stakeholders is important to harness the benefit of digitalization to promote responsible financial and economic inclusion. All of these valuable insights will certainly be useful for us to learn and design strategies and programs for promoting financial and economic inclusion by taking advantage of responsible digital financial practices. Ladies and gentlemen, we finally reached the end of the International Seminar on Digital Financial Inclusion today. On behalf of Bank Indonesia and Indonesia Ministry of Finance, we thank you for your active participation. We hope to see you again on May, when we will be hosting the second international seminar focusing on women in financial. I am Valerina Daniel. Stay healthy and safe. Goodbye. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you. Thank you very much.
Thank you.
Thank you.